Look, my friend Amanda got a tax refund, but I have to pay. Can you explain why? But keep it simple and short.
Uh, okay, Jake, that's a really great question. But I got to tell you, the Income Tax Act is very complicated, and there's always more to know. So I'm going to try and keep it simple, and I'm going to try and keep it fairly short. Start with some really basic concepts. The first thing you need to know is all income is taxable. And there's some exceptions. Things like if you inherit money from your rich Uncle Scrooge, there's no tax owing when you receive that money. Or if your grandmother gives you $100 for your birthday, you don't have to declare it as income. And so, gifts are really an exception to the rule. But
Okay, gifts are tax free. That's cool.
keep in mind that it's a question of fact, not just the words that you use. And the Canadian tax system puts all of your income into buckets. There's an employment bucket, there's one for business, property, capital gains, and other. And we're not going to talk about anything except employment income.
Good. Hey, keep it simple.
Now, believe it or not, the tax system attempts to be fair.
Nope, I don't believe that. Amanda got a refund. That isn't fair.
Yeah, you can argue whether it is or not, but trust me, there is an attempt. So let's take a look at your situation. Now, you both made $36,000 last year,
Yep,
but at tax time, Amanda got a refund and you had to pay it, and that sure doesn't seem very fair, does it?
that's right.
But the tax system, in the interest of fairness, uses something called tax credits, and depending on your personal situation, you might be able to reduce the tax that you owe. And some of the common credits are things around disability and spouses and that sort of thing. Both you and Amanda are single, and you don't have any other special credits. But all Canadians get the basic personal tax credit. What that means is that your income has to be greater than that amount before you have any income tax to pay at all, okay?
Okay. So it's like a threshold. You don't pay tax on the first dollar you earn.
That's the first thing you need to know. But let's go talk about employment income and what happens. Remember that your employer is required by law to deduct certain things from your paycheck. They have to deduct Canada pension if you're over 18, employment insurance, tax, you know all
Uh
this.
huh.
By the way, this isn't just arbitrary. The employer uses formulas that are provided by the tax authorities to determine how much to deduct. So it's formula driven. Keep in mind that what's happening there is that you're paying your tax in advance. And then at the end of the year, you reconcile it. So the final calculation is made then, and you might owe more tax, you might get a refund. But there's one more thing you really should know, and that's that Canada has what's called a progressive tax system. And that means that people that earn more pay at a higher rate. It's just, I think this is interesting. In 2024, an Ontario taxpayer that earned $50,000 would pay tax of approximately $7,500 or 15%. But that same taxpayer, if they earn six times that amount, like 300,000, the tax isn't six times $7,500. They would actually pay at approximately 40% overall. They'd actually owe about $120,000 in total. Okay, so the first thing that happens when you prepare your tax returns is to calculate your total taxes that you owe, and that's based on some funky formulas. And then you can reduce that amount of tax by any available tax credits. Yeah, and the dollar amounts actually depend on the province you lived in at the end of the year.
So the amount of tax depends on my personal circumstances and the province I live in.
Yeah, that makes a difference too. Now, I know that you and Amanda both lived in the same province and you both earned the same income and you had the same tax credit, so you're still mystified, right? Well, I think I know the answer, and that's because Amanda worked full time. But you, Jake, you had two part time jobs that you were working at simultaneously during the year. So what happened is Amanda's employer deducted more than Amanda owed based on the formulas, and that's why she got a refund. But each of your employers thought that that was the only income you were going to earn during the year. Remember, it's a progressive tax system, and depending on, how much you earned at each employer, they just didn't deduct enough tax. So you get the same income, different results at your end. Oh, you know what? This is a really good time to remind you that that refund that Amanda got wasn't a gift from the government. She'd been paying tax all year, just like you were. The refund is just the government basically saying, oh, whoops, you sent us too much. And so here's a refund, but without interest. Now, the good news is that you can actually prevent this from happening next year. And everyone, all employees, should carefully complete the Form TD1 for each employer each year. I know the forms look complicated, but just ignore the stuff that doesn't apply to you and pay attention to the stuff that does. There's actually a place on the TD1 to indicate that you're working at more than one job so that the basic tax credit doesn't get applied to both jobs. As a result, yes, you'll pay more tax each paycheck, but you'll avoid that nasty tax surprise at the end of the year. Okay, that's what you need to know. So I hope that helped,
Yeah, actually, it did help.
but I gotta warn you, there is always more to know. Was that short enough for you, Jake?
Yes, I get it now. I'm going to fill out that TD one. Thanks.
Oh, one more thing, my impatient friend. If you ever start that business that you keep talking about, you might want to check out income tax and self employment to find out what you really need to know. Bye for now.